Hello everyone. Thank you so much for clicking on this video. Whether you're watching this on your commute at your desk or, maybe even on one of the devices we are about to talk about, we really appreciate you choosing this breakdown.
We do.
Today is Friday, January 30th, 2026, and we have a massive update to unpack. We are digging into the just concluded fourth quarter 2025 earnings call from Samsung Electronics. And, well, the numbers are loud. Loud is definitely the right word. I mean, if you remember where we were just 6 months ago, back in the first half of 2025, the conversation around Samsung was, let's call it hesitant.
Oh, yeah.
There were whispers about yield rates, concerns about them falling behind in the AI memory race. But today, the narrative has completely flipped. The message from this call was explicit. Samsung is back.
I appreciate a good comeback story, but I want to see if the math actually holds up to the slogan. So here's our roadmap for this video analysis. We're going to start with the company's prepared presentation, not just the headlines, but the strategy underneath.
Then, we're going to do something we love doing. We're going to go question by question through the Q&A session with the analysts.
Which is where the executives usually have to go off script a little bit. That is where the real signal usually hides.
Exactly. That's where the skeletons fall out of the closet. And finally, we'll wrap up with the big themes, the signal you need to separate from the noise.
Sounds like a solid plan. Let's look at the mission they presented.
Okay, let's hit the financials first.
Bleh.
They didn't just have a good quarter. They hit their highest quarterly revenue in history.
Ever.
93.8 trillion won. For context, that is up 9% from the previous quarter.
And the profitability is arguably the bigger story here. Operating profit hit a new quarterly high of 20.1 trillion won. I mean, that's a jump of almost 8 trillion won in just 3 months.
That's insane.
To put that in perspective, their operating margin, basically how much money they keep for every dollar of sales, climbed to 21.4%. That is a very healthy margin for a hardware company.
It is huge. But when you peel back the onion, it's not a uniform victory, is it? Feels like we're looking at two different companies here.
That is the crucial insight. You have to separate the DX division from the DS division. DX is device experience. That's the consumer stuff.
Yeah.
Galaxy phones, TVs, washing machines.
Right.
Their revenue actually dropped 8%.
Wow. Why the drop? Is it just that people aren't buying phones right now?
It's a mix of factors. They cited the fading impact of new smartphone launches, which is, corporate speak for the hype wore off.
Sure.
But more importantly, they mentioned U.S. tariffs hitting home appliances. That trade war friction is real money now, and it is eating into the consumer side of the house.
Right, so the consumer side is struggling. But then you look at the DS Division Device Solutions, which is the semiconductor and chip business, and it's a completely different chart.
It is a rocket ship. The DS division surged 33% quarter on quarter. This is entirely driven by the infrastructure of the AI revolution. Memory revenue hit an all-time high.
So it's a classic divergence.
Exactly. The consumer economy is soft, but the industrial AI economy is absolutely booming.
They also mentioned a currency impact. How much did the exchange rate play into this?
A significant amount. The strong U.S. dollar added about 1.6 trillion won to their operating profit. You have to remember, chips are priced in dollars globally. So when the dollar is strong against the Korean won, Samsung makes more money just on the conversion.
It's a nice tailwind to have.
A very nice tailwind.
I want to talk about the CFO, Central Park. He was the one who used that phrase, Samsung is back. Was he just cheering for his own team, or did he have proof?
He was surprisingly specific. He noted that customers, the big tech giants, are explicitly acknowledging Samsung's return to form. He pointed to HBM4 and GDDR7.
Okay, let's pause for a second. For the viewers who aren't chip engineers, can we define those?
Sure. HBM is high bandwidth memory. Think of it as the short-term memory for an AI brain. It needs to be incredibly fast to handle training data. GDDR7 is the next generation of graphics memory. These are the premium, high-margin products that power AI training. If you aren't winning here, you aren't winning at all.
He also highlighted some strategic acquisitions. Usually we hear about Samsung buying big consumer brands, but these seemed different. Flat Group, ZF, ZLS, Meshmo.
These flew under the radar, but they are strategic clues.
Mm-hmm.
Flat Group does HVAC, heating, and cooling.
HVAC. Why does Samsung need that?
Because AI data centers get incredibly hot. Cooling is now part of the chip infrastructure stack. ZF is ADS Automotive Tech. ZLS is digital healthcare. They're widening the moat beyond just making chips to owning the infrastructure where those chips live.
That had a fascinating connection on the HVAC acquisition. It's not about air conditioners, it is about server farms.
Not at all.
Now, looking at 2026, they aren't ignoring the risks. They mentioned geopolitical issues and trade barriers explicitly.
Right. And their answer to that volatility is what they call the one-stop solution. This is Samsung's superpower. Most companies do one thing. TSMC makes chips, Micron makes memory.
But Samsung does it all.
Samsung does logic chips, memory chips, foundry services, and packaging all under one roof. They are betting that in a complex supply chain, being the only company that can do it all will be the winning hand.
Before we move to the Q&A, I want to touch on the sustainability update from Daniel Wu. Usually this is where my eyes glaze over, but they dropped a detail about helium that caught my attention.
Yeah, this was actually cool engineering. They are the first in the industry to deploy a helium reuse system. Helium is crucial for cooling during chip manufacturing, but it's expensive and finite.
Right.
They cut consumption by 4.7 tons.
4.7 tons doesn't sound like a lot.
For a gas, it is massive. Helium is incredibly light, and at their scale, that represents millions of dollars and a significant supply chain hedge.
So it's not just greenwashing.
No, it's resource security.
Fair point. Okay, that was the polished presentation. Everyone looks good in a PowerPoint.
Mm-hmm.
Now, let's get into the nitty-gritty. Let's move to the Q&A session where the analysts get to push back.
This is where the real signal is.
First up was Sung-Kyu Kim from Daiwa Securities. He went straight for the numbers. He wanted details on memory performance, specifically bit growth and ASP for Q4.
And ASP stands for average selling price. It is the single most important metric in a commodity market. If you sell more chips but the price drops, you lose.
So what happened to the price?
It skyrocketed. They said DRAM ASP increased by about 40% quarter on quarter.
40% in 3 months. That sounds sustainable? Or does it sound like a bubble?
It sounds like desperation from the buyers. It shows just how starved the hyperscalers, the Googles and Microsofts of the world are for high-performance memory.
Yeah, shipments were up too.
Bit shipments also hit a record high. For NAND, that storage memory, the price went up by the mid-20% range. They also noted a shift toward high-margin server SSDs.
Kim also asked about the mobile business for 2026. What's the plan there, aside from, paying more for their own chips?
Well, they confirmed smartphone shipments were up year over year. For 2026, the strategy is all about the Galaxy S26 launch. But they used a specific buzzword, agentic AI.
Agentic AI. How is that different from the AI assistants we have now?
The idea is AI that has agency. Instead of just summarizing a text, it can book a flight, order food, or edit a photo sequence on its own. It takes action. But, and this is the kicker, they admitted component costs are rising. So Samsung Mobile is paying Samsung Semiconductor more money for chips, which hurts the mobile division's margins.
And they plan to offset that with what? Efficiency.
Supply chain efficiency, which usually means squeezing suppliers.
Of course. Next up, we had Seger Lee from Citigroup. This was the HBM question everyone was waiting for.
Yes. He asked about HBM4. This is the next generation. The big question was, are you actually ready to ship this, or is it just a PowerPoint slide?
And the answer?
Samsung didn't blink. They said HBM4 is in stable, full-scale production. Shipments start in February. That is next month relative to the call.
That's a strong statement.
A very strong statement. They even claim their performance targets are above the standard industry specs.
He also asked about the stack height, 12 high versus 16 high. Why does the height of the chip stack matter?
It's all about density. Stacking chips vertically allows you to pack more memory into the same footprint, which means faster data transfer. Samsung is focusing on 12 high stacks for HBM4E for mid-year.
But not 16.
Interestingly, they said demand for the massive 16 high stack is currently limited, so they aren't rushing that.
That feels like a hint about the state of AI models. Maybe the hardware is actually outpacing the software's ability to use it right now.
Potentially. Or the cost of the 16 high stack is just too prohibitive even for the big players right now. But the headline number here was the sales outlook.
What was it?
They expect 2026 HBM sales to increase threefold year over year.
Threefold. And they said production capacity is fully booked.
Fully booked. Customers are already negotiating for 2027 volumes. If you want high-end AI memory, you take a number and wait in line. It is definitively a seller's market.
Okay, moving on to question 3 from Jay Kwan at JP Morgan. He touched on a sore spot, the supply shortage, and specifically how these rising memory prices are impacting Samsung's own display business.
This is that internal civil war I alluded to earlier. Samsung confirmed tight undersupply across the board.
So what's the strategy?
Well, they actually said they might have to prioritize server DDR, that's standard server memory, over HBM in the short term just to maintain profitability balance.
Wait, prioritizing standard memory over the hot new AI memory. Why would they do that?
Yield and efficiency. HBM is incredibly hard to make. If you can make a ton of server DDR easily and sell it at a high price, that is quick cash.
Right.
But the display business answer was brutal.
How bad is it?
They said 2026 will be more challenging than any previous year for display.
Right.
Why? Because the chips that drive the screens, the DDI chips, are getting so expensive due to the shortage.
So the chip division's success is actively hurting the display division's bottom line.
Exactly. It is a complex ecosystem. Their strategy is to pivot to IT OLED screens for laptops and tablets, specifically their new 8.6 generation line, and stick to the premium market where they can pass those costs on.
Right. Okay, question 4 came from Sunwoo Kim at Merit Securities. This was about CapEx, capital expenditures. Basically, how much money are they spending to build new factories?
The answer is a lot. They are planning a meaningful increase in CapEx. They use the phrase preemptive investment.
Preemptive means building before you have the orders, right? That sounds risky.
It is. They are building new fabs and clean rooms before they fully need them to hedge against volatility. They are betting that the demand curve is going to keep going up and to the right.
They're going all in.
They are. They also highlighted the NRDK, their new next-gen semiconductor R&D complex. They are accelerating the migration to the most advanced nodes, 1C nanometer for DRAM and V9 for NAND.
1C nanometer. I mean, for the viewers, we are getting down to the atomic level here.
We are. One stack is the 6th generation of the 10 nanometer class. It is incredibly precise manufacturing. If they pull this off efficiently, their cost per chip drops, and their profit goes up even more.
Okay, question 5 from Nicholas Godoy at UBS Securities. He asked about the foundry business. That's where Samsung makes chips for other people, competing with TSMC.
Right. He asked about the 2 nanometer and 1.4 millimeter nodes.
What's the timeline there?
They say 2 nanometer mass production is on track for the second half of 2026. 1.4 millimeter is scheduled for 2029. And get this, they expect 2 nanometer project awards to jump 130% year over year.
That's huge. Is this where that one-stop solution comes back in?
Precisely. Nicholas asked about the turnkey strategy. Samsung is pitching this. Don't just let us build your chip. Let us design it, manufacture it, add the memory, and package it all together.
A single point of contact.
Exactly. It saves the customer time and logistical nightmares.
Nicholas also asked about the TV market. Yeah. It feels like everyone has a 4K TV now. Is anyone buying new ones?
The company admitted the market is stagnant. You can't force people to upgrade TVs every year. Their solution is to create a new mainstream category with micro RGB TVs, ranging from 55 to 130 inches.
130 inches. That is a wall, not a TV.
It is. And of course, they are adding Vision AI companion features, but the real money might be in the ads. They want to grow the ad-based service business on Samsung TV Plus.
So the TV becomes a billboard in your living room. Great.
Pretty much.
Question 6 from Simon Wu at Bank of America. He went for the shareholder angle. Show me the money.
Yeah, he asked about canceling treasury shares and the dividend.
And what did they promise?
They declared a regular dividend of 9.8 trillion won, plus an additional dividend of 1.3 trillion won.
An additional one. Nice.
And regarding the treasury shares, these are shares the company bought back. They plan to cancel 6.6 trillion won worth.
Canceling shares basically reduces the supply of stock, which should make the remaining shares more valuable.
Exactly. It's a direct gift to shareholders.
But Simon also circled back to the mobile costs. Is the Galaxy division in trouble?
They were honest about it. They admitted sharp price increases in memory are creating a challenging environment for 2026. To fight it, they're focusing on resource efficiency.
Which brings us to the final question, question 7 from Young-Ho Liu at NH Investment Securities. He asked about System LSI.
System LSI designs the logic chips, so processors, image sensors, modems, not memory.
What's the LIP there?
The low-end market is tough because it's so cost-sensitive. But flagship demand is strong. They are focusing on 200 megapixel image sensors.
200 megapixels. Do we really need that much resolution on a phone?
It allows for better digital zoom and AI cropping. It helps customers' phone makers differentiate their product on the spec sheet.
Okay. He also asked for clarification on that additional dividend. Why did they add that sweetener?
It turns out the government has a tax scheme for high-dividend companies. Samsung joined in to help stimulate the domestic stock market, so it was a regulatory incentive, not just pure generosity.
Interesting. Okay, we have parsed the presentation and the Q&A. Let's zoom out. If you are watching this and trying to figure out what matters for the next year, what are the big themes?
I see three absolute pillars here. Theme number one, AI is the absolute driver.
And we don't just mean the buzzword.
No, I mean strictly in terms of revenue. It isn't just HBM chips. It is AI servers driving DRAM prices up 40%. It is agentic AI justifying new phone purchases. It is vision AI trying to save the TV market. Every single division is pivoting around AI demand.
And if the AI bubble bursts,
This entire earnings report collapses. It's a sobering thought.
it is. What is theme two?
Theme two is the supercycle versus the cost squeeze.
Explain that tension.
The semiconductor division is booming, great for them. But Samsung is a conglomerate. That boom creates massive cost pressure for Samsung Mobile and Samsung Display. In a way, Samsung is battling its own success.
The left hand is charging the right hand more money.
Exactly. Watching how they manage that internal margin pressure will be the story of 2026.
And the third theme.
The one-stop moat. We heard it over and over. Turnkey. One-stop solution. Their foundry strategy relies entirely on the fact that they can package memory and logic together. TSMC can't do that alone. Micron can't do that alone.
So they're betting the farm on integration.
They are. Integration beats specialization in the AI era. That's the bet.
It really feels like a distinct shift in tone from 2025. That confidence, Samsung is back, combined with the aggressive CapEx plans. They are building factories before they have the orders. That is playing offense, not defense.
Absolutely. They see the wave, and they're paddling harder than anyone else to catch it.
Well, that wraps up our video analysis of the Samsung Electronics Q4 2025 earnings call. We hope this breakdown helped you see the forest for the trees.
It is going to be a fascinating year.
If you found this valuable, please do click that like button. It really helps us get this analysis in front of more people. Share this with anyone who needs to understand the market, and subscribe so you don't miss our next breakdown.
See you next quarter.
Thanks for watching, everyone.